I think we are in a very interesting phase from where the country's standpoint is in terms of the economy. An economy which is coming out of the COVID pandemic, and it needed a stimulus. I think the finance minister's budget has been more of a booster shot with major capex push, with a boost to clean energy, with a relief for startups, and with marginal tax changes. So we have today our eminent panel here, and we'll get to hear from our experts. So we have Dr. Indira, who is an economist and a researcher. We have Mr. Manoj Shenoy, who represents the capital market industry, and you know, with his deep insights because of his many years in that particular area. And we have Chetan, Dr. Chetan Chitre, who is the professor of economics at IIM-Amritsar. He is with his fellowship in IIM Bangalore. I've known Dr. Chetan quite well, and I take this opportunity to welcome all three. I'll also welcome our director, Mr. Nitin, who is also with us today. Over to you, Kiran.
Yeah. Great. Great. Thank you, Rani sir. I welcome you too for this symposium, and thank you so much for giving us this opportunity to conduct this most required event. And I also welcome all the participants. Participants are still joining, and I know that you can catch on to this recorded session also later. So good morning, everyone. My name is Kiran Kumar KV, and I am a faculty at ISME. I teach finance, fintech, and analytics courses with ISME, and I'm an ex-banker and an ex-wealth manager. First of all, I welcome all the speakers one more time to this budget analysis webinar. And yeah, I mean, since my graduation days, way back in early 2000, since then, every year, budget is a day when, in and around that day, there is a lot of discussion that happens. And the famous meme goes in the town that, everybody becomes an economist during the budget days, and everyone have their own opinion on everything that is being spoken about. And of course, there are a lot of controversies come up. There are, of course, what I like the most entertaining is the comments from the parties opposing each other, political parties. But having said all that, budget event is much more than that. While at individual level, we all look at for what is there in for me, as an employee of a company or running a certain industry or being a farmer. But budget, as we all know from academic point of view, it's a much more than that. It's a budget basically is conveying how the economy has performed during the past year or past few years. What is the viewpoint of the administrators, as known as the government, or what is the direction that the current government is attempting to take? And where are we seeing this economy to be moving? So both at a global level, at a national level, and also at individual levels, we are all looking forward this. And finally, all this percolates down to what benefits us individually. So budget 2022, which was presented by the finance minister on 1st February, around 10 days ago. Of course, I just want to make one comment here that, initially there are a lot of budget analysis that happens, the same day there are a lot of these things. But somehow we wanted to conduct this after some time because some clarifications emerged post the budget. So we waited for a week or so, and then we decided that we'll do this event so that we have much better clarity. Multiple perspectives have been taken and clarifications have been issued. So we had time to mull over it. And thankfully, we are here today to discuss. So this budget, in simple way, it's my personal opinion, was unique in a way. It was ambitious, and of course, at a certain level, a certain extent, it was experimental too. The workability and the challenges surrounding the proposals presented are multidimensional, definitely. And each economist, each capital market participant, each researcher, each expert has its own view on different aspects of it. So I'm very happy that today we have with us three experts with us. I would like to take some time in introducing the experts to us. I'll start with, in no order of seniority, I would like to start with introducing Dr. Chetan Chitre, who is a professor in economics from IIM-Amritsar. He has done his PhD in economics from IIM Bangalore. And what is most interesting is Sir's area of working is the financial appraisal of industrial projects and strategic consultancy for MSME sector. And he also teaches courses like microeconomics, macroeconomics, and development economics at various institutions. And his areas of interest, where he keeps exploring more and more, are use of ICT for development, okay, the education sector, agriculture sector, and livelihoods. How these development aspects are growing in these spaces. So I think we have a right ingredient here now to discuss certain aspects of this budget. I would also like to introduce sorry, Mr. Manoj Shenoy with us. Manoj Shenoy, of course, he's a very popular name in the wealth management and capital market space in India. To talk about his experience, he has like more than 3 decades of experience in the financial services industry, and currently he's the CEO of IIFL, wealth management, asset management company, and he's held the position of CEO of EFG Wealth Management, which happens to be the subsidiary of ETG Bank, and he was also the executive director of Anand Rathi Financial Services, one of the most popular and successful stockbroking and wealth management firm. And majority of his career was also held as he has held the position of CEO with L&T Financial Services. So I welcome Dr. Manoj Shenoy also. I would also like to introduce Dr. Indira, who is an economist by profession, and she has over 30 years of experience as a teacher, as a trainer, as a consultant, as an economist in the area of economics. She has done her PhD in economics from Institute for Social and Economic Change. She also has MTech in Management Studies from Indian Institute of Science, one of the most reputed institutions in the country. Then MA in Economics from Central University, Hyderabad. One interesting thing that I found it very relevant for her to have as our panelist is that she's been instrumental or part of the team where she was set up. She was part of the team that set up the Center for Budget and Policy Studies in Bangalore. She's a visiting faculty with various B schools, including IIM Bhubaneswar, IIFL Hyderabad, Wellinger Institute, IFMR, and various other reputed B schools. I welcome all the panelists and first of all, thank you for agreeing to be part of this, and we welcome you here. Moving forward, as we all know, one of the key themes that was presented in the budget by FM was the journey, the pathway to India at 100. We are at the 75th year of our independence, and in the next 25 years, what is the pathway that we need to take? So this budget looked like a blueprint towards that, with the 4 key themes which have been presented. The public investment for building modern infrastructure, the Gati Shakti, the inclusive development, which has been a constant theme, in every budget, of course, but the implementation has always been questioned. Productivity and investment, sunrise opportunities, energy transition, and climate action was the 3rd theme. And finally, the sourcing, the financing for all these investments. Okay, this is what was the theme under which it was presented. Now, I would like to invite Dr. Indira, Madam, to share some insights about key insights of the budget event that happened, and then I will go to the next panelist. Madam, if you can take over.
Yeah, could I? Yeah, I think I can do that.
You can share the screen, I think.
Yes, I can. Good morning, everybody, and I'm very happy to be here discussing the budget with the eminent panel and all the other students and the attendees in today's webinar. I thank ISME for giving me this opportunity to be here. I'm sure Professor Kiran has already given us the fundamentals of what we're about to look at in terms of the budget. But even so, I thought because we have the other 2 panelists with giving us more detailed understanding of the thing, I thought we'll go through the budget in terms of what was given to us and what we need to understand as its basic framework. And this is the time of the year when we generally look back and understand stock taking of, so to say, of what has happened in the past 1 year and how to go about it. And just as we thought that the budget exercise and its discussion was becoming a pure hype and more of a public discourse, it seems to have come back to relevance because of the pandemic situation in the last 2 years. And we have to understand that it's an annual financial statement enshrined in the Constitution, and so we do it as a annual exercise, giving us the receipts and expenditures of the government. So we understand what our elected representatives are doing with our money. And also, this is a time when we actually have come to a situation where we need to discuss the policy issues of whether it should be a fiscal policy or a monetary policy to take the country forward. And we can understand that the budget is basically a fiscal policy instrument, and it looks at the two options that the government has in terms of either getting its revenue through taxes or its borrowings. And the budget statement per se looks at only the allocations that have been made for the coming year in the financial year and how much money will be spent. But most importantly, most people look forward to the budget to understand whether there is a stability, a clarity, and a certainty to the economic policies that will be now given by the government. So just for a small recap of what has happened, I have the graph there where you can see the real GDP of the country over the last 5 years. And we could see that as we are growing in terms of the growth, the 2021 was in effect, as I said, a year which gave a new normal, so to say. Our growth rate had dipped to about minus 7.5, and but we have shot back into regaining the same level of GDP growth in 2021, 21-22. So we are back in the real GDP growth of 147 lakh crores. This is in the background of the situation that we have an aspiration to reach about 500 lakh crores or 5 trillion as our GDP. So we need to know as to where we stand with respect to the actual GDP at this point of time. Mind you, the real GDP growth is not what has been given in the budget statement. We are more looking at the nominal GDP there because we are discussing India's growth with respect to other countries, and IMF has shown that it has anticipated a growth rate of nearly 9% for the economy, and India stands in the top 30 of the countries in the world, which gives more than 80% of its output. And so when we stand fifth, it means that in terms of nominal GDP, we have overtaken France and UK too. So that's the position that we can see for ourselves when we look forward to understanding the budget this year. And just to give a brief background about what the economic survey has given us, because that is one of the fundamental survey reports that the government uses to understand as to where we stand. We could look at the demand in the country as to the aggregate demand coming from the four engines that we have: the consumption from the households, the investment from the industry, the government expenditures, and the balance of trade or the exports and the imports. And we could see that coming along as we were nearing 2020, 2019-20 was a year of slow growth. Actually, we were falling behind, and 2021 actually brought us to a new normal. So it actually brought to a kind of a thing, but it also paved the way for a new portal to a new beginning, so to say, as Arundhati Ghosh spoke about. So it is that kind of a situation where we are looking at, and you could see that the recovery has been made in the economy in 2021-22 with the consumption levels again coming up. And so the government is hopeful that there is a kind of a demand. There's a pent-up demand because of the slow growth that we have had among the households and the consumers, also with the investment, though we would say that there was a lag in the industrial sector because there was a total stagnancy in terms of the closed or the reduced levels of production and consumption, and also the gross fixed capital formation that was happening in the country over the last 1.5 years. But I should say that India we have been able to grow. I mean, India as a country has been able to reach our vaccination drive, and one of the largest drives in the whole world. And as of yesterday, February 11th, the coverage has exceeded about 171 crores cumulatively. So we are doing well on that front. And if you were to look at only the three sectoral kind of a situation as the growth we have, the primary, secondary, and the tertiary sectors, looking at agriculture, industry, and services, it is for our good fortune that agriculture has stood the stead in terms of the difficulties that we had, because agriculture did well, and so we were able to cross over the difficult moments in the time that we were. And industry again has bounced back, so to say. Services have been very badly hit, and so that's one of the points that the where we were trying to look at as to how that can be improved upon in terms of the overall impact that has happened because of the pandemic in the service sector. So with that small brief background, we could look at as to what the budget highlights are. And this has been discussed, but I just thought we'll put it there on the screen so that all of us know as to what exactly we are talking about. It is a kind of a futuristic document, so to say, because the finance minister discussed what she called as the Amrit Kal, that is the next 25 years for India to reach 100, 25 years towards India at 100 with our independence. And the three main issues that she thought that were important is inclusive growth, digital economy, and a virtuous cycle, in the sense that the government helps in kicking off investments in the private sector. And so the private sector now pitches in. So there's a crowding in effect of the investment of the money that is going to be flowing in for further development in the country. So the four priority sectors that has been listed out in the budget this time are the PM Gati Shakti, where there are 7 engines to the growth engine that she has talked about in terms of building up the infrastructure in the country, basically looking at the supply chain and the logistics infrastructure, looking at all the various multimodal transport and the various transport sector. Then we have the inclusive development with the 4 basic things that we were looking at. Agriculture, where we would be having a use of digital technology, river linkings in key areas, public-private participation in terms of having drone technology for use in agriculture. Then we have health, where she has tried to take forward the work that was done in the earlier budget of 2021 with respect to the nutrition and health programs. Education, moving further down towards universalization of quality education through digital means to build our skills further. And then, of course, MSMEs, where you are looking at how to bring forth, because we need to realize that MSMEs have been one of the worst hit in the country this year because of their because more numbers are in the informal and the unorganized sector in the MSMEs, and they have been one of the worst hit in the country with respect to their own livelihoods. And the recent reports even say that nearly 70% of the MSMEs had no profit that they could see in 2021. And so there is a realization to make more credit available to them so that we start to stand on our own. And so this, and the next 2 priorities, of course, is the productivity enhancement and investment, sunrise opportunities, energy transition, and climate action. Again, here, the more the focus is towards building up our own energy sufficiency in terms of renewable energy source, also having a take on how the climate action is going to happen. We do realize that most of us are, or the world over, there is the impact of that's happening because of severe climate change. And so it's moving towards understanding ease of doing business and ease of living. And so because of that, this time there has been a concrete step made towards moving towards bringing together states also to pitch in and do their efforts. So there is that. And again, the financing of investment. So that is the more important or the key point that we're looking at, where the public investment will continue to be pumped up, and so that there is more of a private investment and demand. The impact of this on the greater fiscal space to states comes from the 15th Finance Commission. Again, there is another document that is very important for us to understand when we discuss budget, and that is how the 15th Finance Commission has said. The Finance Commission, as we all know, is set up for a period of 5 years. In this study that we could see that there was no change in the amount of devolution of the funds. It's still about sharing of the finances or the revenues that the government receives. About 41% is devolved to the state, and so that continues. But there has been more emphasis of how the fiscal deficit is going to be. So we will discuss a bit of the fiscal deficit and what impact it has, but it tells you as to how much they could talk about the states taking responsibility and how much further they can go in putting their share into the whole development aspect. And so here there has been a document says that the states can go up to 4% of their gross state domestic product, and of which 0.5% of that would be towards improving the power sector reform. So that's one. So there is an enhanced outlay for capital investment. So this comes, of course, in a grant in aid form. And so it would also be on a demand-based theme. Then, of course, the two interesting thing, the one most important thing, I think most of us who would discuss it in terms of monetary policy, which of course I won't do in this session, but is that about the introduction of the digital rupee by the RBI starting 22-23. So that's another position that the government has taken about the digital rupee as we can take. Of course, there's been a stability in direct taxes and that, so we can take forward that. So just to have a macro picture of what the budget size is and how it is, this is straight from the budget document that we have. And you could see that the budget size is about 39.45 lakh crores. And a lakh crore means about 12 zeros after the number. So that's the size of the numbers that we are talking about. So in trillion, so that is the number. And if you see, as you see the screen, the left of your screen talks to you about the receipts and the right shows to you the expenditure statements. And we could look at what the two numbers are looking at. So you could see that we have the tax receipts, which is coming from the revenues that we pay into the government in terms of direct and indirect taxes, and how much of a debt is required to finance the whole allocation setup that we have. And where is this money going? The money is going towards scheme expenditures that the government would want to fulfill its objectives, and also the transfers towards its establishment, salaries, pensions, and others, and the transfers to the state. So that's how the two parts are divided. Now, to go for a quicker understanding, let's talk about the total allocation. The total allocation for this year is about 39.45 rupee lakh crores. And the two are divided between what we call as a revenue receipt and what is called as a capital receipt. Now, in the capital revenue receipts, there are two parts. One we call as the net tax revenue, which is inclusive of all the direct taxes, the indirect taxes like GST, union excise duties, all of those. And then we have the non-tax revenues, which is basically some of the receipts that the government would be receiving otherwise. So this pulls up to about 22 lakh crores. So you can see there's a shortfall of about 17 lakh crores there with the revenue and the total allocation made. And how is she making it up for that? That you could look at from the capital receipt. The capital receipt looks at two parts, basically the borrowings that the government is making and any other capital receipt that it wants to look at. So here, there are three parts to it. So you have the PSU disinvestment, that is where some would say that you are selling off pure gold to take care of the economy. Some would say that government has no business being in the business, and so it's better that is privatized. So there you have the PSU disinvestment. Not that it has happened very congenially or has happened very easily. It has taken a bit of a time, but you have the PSU disinvestments there, a small bit here that you're coming in. We know about Air India. Then, of course, the borrowing. So you can see the lump of the money is 16.6 crores is coming from the borrowings here this year. So that's a large chunk of money. So you have 22 plus 16, which is about 38, and a small chunk coming from the non-debt receipts there. So this is the money that we have in terms of the total allocation. What's interesting and positive is that there is a green shoot in the economy in terms of tax collection itself. And this year it has been with corporate taxes. And so that means there has been a sign of a good recovery. And you would also see that the direct taxes in terms of income tax and corporate taxes are shoulder to shoulder. But what is of little concern there is that the GST is actually higher by a few thousands than the corporate tax. That means there is an indirect tax component that would still be hanging upon us. And we know that when we look at the axioms of taxation, that would mean that people are burdened with an indirect tax component, that those who have money are not paying in as much, whereas the lower poorer who are more into consumption would be paying more through the services that they are paying for. So that would be what it would look like. So moving on to the expenditure statement. Again, you have the revenue and the capital expenditure statements that we have here. Both of them are put together on the left-hand graph that you can see. And here you can see that the revenue expenditure makes the bulk of our growth. That's about 31.9 lakh crores is the revenue expenditure. That is, again, if you discuss what's revenue and capital, capital is where you make an asset, and revenue is where it is a recurring expenditure sometimes in terms of your establishment. So the capital expenditure is only 7.5. But why it is being talked about in this budget more is what you can see to your right, that this has two parts, the grants in aid, which comes as part of the revenue expenditure, and the capital expenditure per se. And you could see that over a period of time, the government has started to increase the component of the grant in aid towards the capital expenditure. And this year, especially post 2021, the capital expenditure has actually increased from 4.3 lakh crores to 7.5 lakh crores. So that is the major growth that you are seeing in terms of the capex that you are talking about, the capital expenditure. In, that is the investment being made or the allocation made towards the objective of increasing capital infrastructure in the country. Part of it would come directly from the union government, and part of it, which is part of grant in aid, would come basically because you are expecting the state governments to pitch in, and so they would do their parts, coming up with their own plans as to how to take it further in terms of growing the investments there. Now that brings us to the other major expenditures which are of serious concern. So you would see that the trends in the other concerns, again, because we started off with the transport, you could see that over the last 3 years, transport has been one of our main expenditures that we have been making. So you could see that. But you can say that the others are also getting their share. It's not, I mean, I wouldn't say it's very high, but they have been maintaining that at a level. But the more interesting ones as students, when we look at the budget per se, are these three that we would want to look at. Basically, how much of the interest payments are we making? How much of the subsidies are being given? And what is the amount being spent on defense, considering our position in a geopolitical sphere? Interestingly, again, you would see subsidies have started to come down. They have, so you see the orange line there. So the subsidies have started to, and that is again coming from the 15th Finance Commission. The government has taken note of that, that subsidies should be definitely be looked at in a serious manner. So you can see a drop in the subsidies. Defense, again, this has increased, and in fact, the budget this time says that we will be taking more of an Atmanirbharta approach towards defense. So there's going to be more privatization of defense production in the country. So that's a plus if you want to look at it in terms of capital expenditure. But interest payments is again one of serious concerns. So if you look at 9.54 lakh crores here, it actually takes about 23% of our total expenditure. So you can see how much of money is left over in the hands to do any work. So we have to look at how much interest we are paying for the money that we are borrowing. So that brings us to the main question of deficit. So this is an important part where we look at the three kinds of deficits that we look at: the fiscal deficit, the revenue, and the primary. Of course, we all know that balanced budgets are a thing of the past. We really are not looking at that. So a revenue deficit where we would expect the receipts to be equal to expenditure is not the game plan. After economics, you would see that deficit financing is the way forward. And so you would see that the fiscal deficit has actually increased. So this is the actual borrowing requirement of the government. So this is the total expenditure minus the revenue receipts plus the non-debt capital receipts. So that's 45. And this is a direct number if you can correlate with the amount that we are being borrowed. So that is why. And this, of course, again, you have to look back at the FRBM Act, that is the Fiscal Responsibility and Budget Management Act of 2003, where we gave unto ourselves as to how much of the money could be taken as a loan and how much should be, what is the kind of a fiscal prudence that the government would be showing. We're far away from it. We were maintaining that about 2.4, 3.3 even till 2019-20. It shot up to 7.3 in terms of revenue deficits and 9.2 in 2021. But of course, this budget again has trying to say that it will be bringing it back to a considerable level of 6.4. But this is over a period of 2 to 5 years, as already suggested in the last budget. So that, but even so, it is going to be a positive step towards maintaining our fiscal deficit. So what's the fiscal position in an overall measure? Just to summarize before I move on to leave the stage for the next panel member, the economy is in a revival mode. There's a capex is about 36% increase to grow the virtuous cycle. The states need to pitch in. So there's a lot of emphasis on how the states are going to be bringing back their plans together so that they work towards in tandem with the union government. Fiscal deficit is definitely going to be projected as 6.4%. There is high borrowings. That's still a matter of concern because that's an intergenerational issue that we would talk. Do I take a loan to satisfy myself? leaving the burden to my children, or will I work so that I leave some wealth for my children? So that's high borrowing is a serious issue. And of course, we can expect improvement in tax buoyancy, because there still seems to be that we have not fully looked at how much of money can be raised in terms of tax revenue, which is a way of going forward. So thank you so much. I'll move on, leave it to the the other panel members, and then maybe I'll pitch in at the end to talk about how it looks like. Thank you.
Great. Thank you, ma'am. Thank you so much. That was such a comprehensive summary, and in fact, you covered all the questions that I had for other panelists also in your presentation, but it was really required. We kind of summarized, and yes, a few things that I could observe is like during this pandemic time, one of the things that we all talked about was, is there a V-shaped recovery possible? Looking at the graphs that have been presented, it seems to be possible with the fiscal deficit targets, etc., like this. And also the other concern that you also raised in between is about the increased borrowing to fund this capex. So let us see how we can explore going forward with other panelists also. I would like to invite Prof. Manoj Shenoy. Manoj sir, would you like to turn on your video? Okay. I will ask you.
I'm not able to. Yeah.
No. I'll make you the host. Let's do that quick process again. You can turn on your video. I don't know
what happened, but
yeah, no problem, sir. No problem. And then you make me the host again. Great.
Okay.
You can click on participants against my name, more, and make host.
Yeah, I hope it's clear now.
Yes, sir. Yes, sir. Great. Thank you. Yeah, so basically, sir, the question, or rather the point that I wanted you to discuss was, this budget, even taking cues from what Madam Indira has presented, the focus on capex and investment-led growth than leaving money in the hands of individuals and households, which has been one of the populist thing that we would have seen in many of the budgets in the past. So do you think this is a right step, or do you think it's consistent with the vision that the government is trying to? So on this, some comments from your experience.
Yeah, see, first of all, before I take that question, I must say that globally, government budgets are a last page article. It doesn't even take the front page. So it's just a expenditure and income statement of the government. So typically, only in India for last so many years, we create a hype around that, but a lot of things happen outside the budgets than within the budget. And a lot of things, like for example, GST is again outside the purview of the budget. It's with the GST council and stuff like that. So I think it's only a matter of time when probably 3, 4, 5 years from now, you may not even have a budget panel and discussion. It'll just be a normal stuff. So having said that, again, before taking your question, I think it's also very important to say that the government today had two things when they came into this budget. So one is elections in 5 states. So that itself would have given shivers to people that how the budget will be in terms of continuity and whether it's going to be pro-growth or pro-populism and stuff like that. So that is one. And the second is also equally important, is that the government was not even coming out of, in the midst of a pandemic. And we don't even know when the pandemic is going to get over. So a lot of debate always happens. I'm not an economist. I'm not even a finance professional. I'm an engineer by profession, just accidentally in financial services. But having said that, temporary measure that the government did for the last 2 years. So that was the fear that was coming out, whether doling will happen or this one. But surprisingly, in spite of the country coming out of pandemic and 5 elections, I must say that this is a very bold and growth-oriented budget for a simple reason that most of the expenses are towards capex. So we have at least 7.5 trillion rupees or 7.5 lakh crores, which is earmarked for increase in capex, which is a significant increase from what it was budgeted last year or the actual of last year, which was 5.4 lakh crores. So having said that, it's a sure shot growth-oriented budget given the circumstances, and it's a bold move by the government. And also the second thing, I'm talking from a capital market perspective, is overall people also look at the continuity of policies. So the continuity of policies remain. Maybe people were hoping that for the middle class something should come in terms of tax cuts, etc., etc. I don't think every time that is possible. They've just kept the continuity in terms of the tax regime. However, it's also very important for us to know what are the things that have happened in the last, outside the budget, which is equally important. So apart from the growth orientation and stuff like that, whatever we are seeing, the key supply side reforms, which nobody talks about, I think which has already happened outside the budget, is production linked incentive scheme. I mean, just to give an example here, mobile telephones. We used to import, and mobiles were the second or the third largest imports our country used to do at a point of time, maybe 3, 4, 5 years back. Today, we not only we are net exporters of mobile phones today, and it is all driven because of the production linked incentive scheme, and this is extended to various other sectors. There has been banking sector reforms, significant reforms on that side. Banks have become stronger and they are able to take part in the growth in terms of lending. With the capex happening from the government, it will the private sector will only follow after the government spending starts and stuff like that. There has been action in terms of retrospective tax, which got repealed and stuff like that. So given all this and given the constraints of election and the pandemic budget, it's a very bold and a growth oriented move. And I think this to me is a foundation set for the next at least a decade, for at least a 7-8% kind of average GDP growth for the economy.
Great, sir. Great, sir. Thank you. I think that completely puts the things in perspective regarding the question that I asked was about whether this was a correct move, and I think you seem to be confident on this. Now I would like to invite Dr. Chetan. Sir, one thing is, while we are talking about capex and a lot of these things, in comparison to any other period in the past, we have a very unique situation. That is our pandemic, impact on the whole economy. And I just wanted you to throw some light on how this budget might work, or not work in the pandemic struck economy, and because a lot of uncertainties are still unresolved. So what are your views on that, sir? Some points.
Yeah, thank you, Professor Kiran. So a couple of points that I would like to take from the previous panelist. One is, yes, the pandemic is behind us, and as Dr. Indira showed us some numbers, there is some growth being revived. We are talking about growth in FY 21-22 in the range of 9%, etc. But there are people who say that this may not really be a V-shaped growth. I mean, we are kind of debating over the alphabets, and there is a very strong sense that this is going to be a K-shaped recovery, right? With certain sectors, especially the formal sectors, reviving very quickly, whereas the informal sectors, the MSMEs, some of them really having extended periods of pain, right? So evidence is again there. I mean, if you look at the kind of revival, sectors like tourism or aviation are just about reaching or have not yet reached the pre-pandemic levels, right? If you look at the growth in credit, a major revival of credit has come from consumer spending, right? Which is coming from the salaried class. There is also one argument that while the industry was in a lockdown, the stock market was seeing all-time highs, right? So one of the argument is that the salaried class, especially the upper middle income class, had some amount of forced savings, which were then directed into stock markets, and that has driven stock market growth, along with, of course, the easy money policy and cheap money floating around the world. So there is going to be some sectors which will need a special care, right? The arm of the K which is going down, right? So again, taking cue from what Mr. Shenoy said, we have been hoping that budget becomes a non-event in the since last 15, 20 years, right? But unfortunately or fortunately in India, that does not happen. I say fortunately because otherwise you would not invite me to, or invite all of us to. So, I mean, you have to look at this budget as as an extension of what policies have been announced over the last 2 years, in the pandemic period, right? And I see a very nice continuation in these policies, right? And so during the pandemic, there was always this kind of a dilemma. Some people thought that we should be, putting money in the hands of people, giving out those, transfers in Jan Dhan accounts, and 500 rupees is very less. It should be 5,000 rupees and all kinds of things, right? A very straightforward question to ask is, if your industrial sector is, or the entire manufacturing is in a lockdown, where are you going to spend that money on, right? So I think the government has done a very smart move by using a very judicious mix of fiscal and fiscal transfers, accompanied by asking the financial and the banking sector to do some sort of heavy lifting, right? So all these, credit guarantee schemes, the ECLGS for the MSME sector, or the TREDS schemes, which the government has, they have kind of used the pandemic as an opportunity to push through. Yes. Right? One of the problems of the MSME sector, so just to give you some kind of sense of numbers, the annual survey of industries, or even the CMI Progress data, which is considered one of the major sources of corporate data, has something like 50-60,000 entities in it, right? The NSS survey, which was conducted in 2014-15 or thereabouts, right, the 73rd round. This was a survey of enterprises. They listed some 65 million MSMEs in the country, right, registered and non-registered. So that is the kind of data gap that we have, or we had until recently, when we talked about the MSME sector, right? And obviously, if I don't know what these MSMEs are, if I don't know their financials, if I don't know what kind of work they are doing, and it's very difficult to make policies for them. Right. So one good thing that has happened, because of this pandemic, is that MSMEs were in need, and the Ministry of MSMEs acted very quickly, and we have, thanks to this ECLGS schemes and everything else, we have today data on at least 130 lakh MSMEs, or 13 million MSMEs who have availed the facilities of the ECLGS. Right. So at least about from near 1% of MSMEs being in the database network, we at least have about 20% of MSMEs whom we know what is happening. Right? We have some hold on their financials. I think this is one of the major moves, and that has been continued in the budget in the sense that the ECLGS scheme has been extended till March 23 with additional allocation, taking the total allocation up to about 5 lakh crore, etc. Right. The other move, and I agree with when Mr. Shenoy says that the banking and finance sector has been very quietly behind the glare of the media, doing a lot of nice things. One of them is the TREDS scheme, which is basically the MSMEs get their bills discounted online from the banks, or there is this ease reforms that the public sector banks are doing. So there is actually a website which says that get a public sector bank loan in 59 minutes, right? And certain basic processes or basic in principle approvals of public sector for your loan application can actually be had online, right? So these are the kind of things that are going to benefit MSMEs, bring their transaction costs down, especially in these times of pandemics. And as we know, the MSME sector is also the sector which is doing the heavy lifting in terms of generating employments and contribution to GDP, right? So in that sense, I see the budget as a continuation of and agreeing to what Mr. Shenoy says, one has to look at what happened in the last 2 years along with what is happening in the budget. We are one of the quotations, I don't know who said this, but this is an Atmanirbhar Bharat budget. Right? So the push to MSMEs or the continuation of push to MSMEs, the continuation of push to the PLI scheme. If you see the rationalization of customs duty, it is all in line with what is happening in the PLI scheme. So while we are focusing on PLI schemes for the electronic sector, simultaneously we are reducing, reducing the concessions given for certain electronic goods such as air conditioning or kitchen appliances, etc. In fact, in some cases, you see the duties going up from 30% to 100%. Right? So that's a kind of. My only small worry is that while we are trying to push up this MSME sector, which is a very great kind of thought, we hope that we don't go into the age-old import substitution model that we all have learned in our textbooks. Right? So because getting export competitiveness is or having industrial investment in place is a tough job. A relatively easier job is to erect import tariff barriers, right? So let us hope, and I'm sure this government has. We all have learned those lessons in the hard way. So let us hope we don't go down that line. But overall, I see this budget as an extension of what has been happening over the last 2 years in terms of government's efforts to revive the economy from the pandemic. Right?
Yes, sir. Great. I think that was well put, sir. Thank you for that. And yeah, we are almost reaching the concluding time of 12:30. We wanted to conclude. So I would quickly have some quick questions to ask you, maybe 2-3 minutes if all of you can come in. I'll start with Manoj, sir. One more question to you, sir. And the most exciting topic amongst all of our students, I don't know, whenever I talk about a lot of other things, they don't get excited. But when I talk about cryptocurrencies, I don't know, somehow they think that's where the money lies. So you, considering that you come from the wealth management capital market background, so a quick comment on the virtual assets and the the comments or the regulations that have been passed using this budget by the finance minister. And also, sir, you also mentioned in the previous talk of yours some sectors you did mention. If you can relist those sectors that you think might largely benefit. So 2 questions.
Yeah, so I'll take the second one first. In terms of sectors, obviously with the capex being announced, it's a no-brainer that capital goods and infrastructure sector will have to do extremely well. That is number one. Today, apart from this, I think the whole country most of the corporates today are running at about 72% capacity utilization. So typically the private capex starts when the capacity utilization comes closer to about 80%. With the demand side improving, I think even that is likely to happen. And then so the capital goods infrastructure space is number one. The second is I'm talking in relevance to the budget. There are a lot of other sectors also. Is housing and housing finance, because if you look at it, there has been a significant allocation in PM Awas Yojana in terms of affordable housing. So that is one segment which is likely to benefit to a large extent from the budget announcement. Banks, of course, once the cleanup is done and the capex happening, if capital goods and infra sector is going to do well, obviously it can't do without banks coming in and lending, and then their incremental incomes coming, and etc. etc. The fourth one from a budget perspective is auto. The government is to come up with this battery swapping policy. So which means it will certainly benefit companies which are future looking in terms of electric vehicles, etc. etc. So the auto segment is one. And lastly, which is a neutral kind of sector, which I always keep telling in terms of global volatility, interest rates going up, fear of interest rates going up there, etc. So all that, and then liquidity getting removed and stuff like that. So while the volatility will be there, I think pharma and IT sector, especially IT services, these are two sectors which should also do well. Now coming to cryptocurrency, as we all know, it's a digital payment system. That's what they say. That doesn't rely on banks, and then to verify transaction, it's a peer-to-peer system, blah, blah, blah. So all that stuff. So first of all, we need to understand whether it is a currency or whether it is an asset. So even after so many years, I have never invested in crypto. I don't know why. My son keeps telling me that I should start doing something on the crypto side, but somehow I have not had the courage to do that. But having said that, if you look at it from the budget, Nirmala Sitharaman's thing on the digital currency, etc., and then the taxation on crypto and all that. So to some extent, I think the government is indicating that it is not a currency, it is a asset. It's like a asset class. So because if it is a currency, it can't fluctuate 5%, 10%, 20% in a single day. I mean, then how will you use it as a currency? I mean, you can't use it as a currency if there is a fluctuation. If there is a fluctuation, then obviously I think I will look at it more from a asset class perspective. I have not done much research in terms of the underlying, how the blockchain works and how the mining happens and how the computers create these cryptos, etc. All that. But having said that, if so much of money has already gone into it, I don't think it is a fly-by-night, or like what some people say that it can just vanish and stuff like that. I don't know really whether I missed out big time in terms of investing. But my advice to my investors and my clients has always been is that like how we do asset allocation, maybe a 2-3% of your overall investable surplus, which will not bother you even if it becomes a zero. Maybe you can take a call and then ride the rally to whatever extent it goes, or even if it goes zero, I think one should not be bothered. So I think it's a complicated thing. I've honestly not understood it very clearly, but today, at least from a taxation perspective, I understand it's an asset.
It is there. Yes, sir.
Yeah, it's not a currency.
True. I think I completely accept your views, and that's something that even I do. I mean, I keep talking about cryptocurrency. I teach students on crypto and fintech, etc. But I haven't never invested in crypto too. And I feel the same thing. Am I missing something, or am I really, right in, taking this contra view? But anyways, we'll let the time decide that. Thank you for that comment from Mr. Manoj sir, and also the list of sectors that you gave. Chetan sir, I would like to invite you one more time for a quick bite. We are running out of time. Something on the infrastructure side, sir. Yes, you did mention in the previous version also. You did say that there is a lot of focus that's going to be on the infrastructure. And I want to specifically ask you, are there any certain development areas? With infrastructure in itself is a broader theme. So would you want to sort of throw some light on which themes within infrastructure do you foresee in the future with this capex investment? Which specific themes in infrastructure?
So I think if you look at the track record of this government, its record on project implementation has been really commendable. Right. So roads, railways, and are the obvious ones because there is so much to do in those sectors. Right. I mean, one quick statistic is that logistics, which depends on the infrastructure, the share of logistics in Indian GDP is in the range of about 14–15%, right? Whereas ideally in developed economies, if your roads are running smoothly and if your railways are unclogged, your goods trains are moving, it should ideally be in the range of 7–8%, right? So that is the scope for savings in logistics that is possible. And we hope that the infrastructure investments, when they when the projects are implemented, they give us those kind of savings. Having said that, there are some interesting measures that the government has put in place. One of them is that National Infrastructure Pipeline and the National Bank for Infrastructure Development, which Mr. K.V. Kamath is heading. We would like to see a lot of project implementation coming forward. Right? There are 9,000 projects that have been identified. So I know that how many projects are there. There is a project ID, there is a project promoter, etc. All that data is available on. But we'd like to see some movement. And one has to appreciate that a lot of bottlenecks in the infrastructure projects are political in nature, in terms of land acquisitions or in terms of say, for example, allocation of spectrum, etc., etc. These are all quite political economy related issues. Right? One final comment is that we have been having a lot of talk on multimodality in the infrastructure sector. I have not seen much of multimodality coming in place. So even this budget talks of some multimodal parks being will be promoted, etc., etc. One would really like to see that multimodality come on ground, where I can seamlessly move from railways to roadways to air, air cargo, or to shipping, etc., etc., and inland waterways. Right? Inland waterways is another area where a lot of scope exists, and we would like to see a lot of work happening.
Okay,
so that's a quick.
Right. Thank you, sir. Thank you, and. Madam Indira, may I invite you for some concluding remarks? You've been an avid researcher in policy making, budgets, and economic trends. So, where do you see, with all these insights that you've got and the budget analysis that you have done, where do you see we are heading now? Maybe that could give a proper conclusion to the event now.
Yeah, that's a very difficult question, because when you see both sides, it's difficult to give you an answer. But I would rate myself more as a development economist. So the conflict lies between growth and development. And we find that this government has done well in terms of fiscal prudence, in terms of being judicious, as the other panel members were also speaking. And I think for the first time in 25 years, we have actually started to look at more in investment and more than the consumption-led growth in the country. But the thing is that we have had a lot of problems in terms of inequality that happened. in terms of economic inequality, and the pandemic showed up the differences pretty starkly. So there is that difference that is going to be there. So it makes it much more necessary that all of us work towards a trust-based governance that we are talking about, so that we are able to reach to the aspirations that we have created among the people, number one. And with respect to our own economic issues, there are 2 points that I would like to say. One is with respect to the protectionistic tendencies of countries outside India also. So we are talking about a fiscal deficit which we can manage, but that would go very directly together with respect to our trade deficit. So if you are able to produce well and export well, so then it will be matching. It will be doing very well with respect to Atmanirbharata. But then if that protectionism becomes a part of a nationalistic tendency among all other countries too, which we could see in the vaccination that happened in the vaccine equity that we are talking about, then we are caught in the wrong foot. So that's something we will have to look at. That will be number one. And the other, of course, is with respect to interest rates and inflation. That is beside the hand in that we need to of the monetary policy. And I think yesterday the RBI has given its statement as to how it wants to look at the future. And I think they're right in their understanding that our ways of economic growth is pretty different from the outside country. And so I think all of us, when we put together our heads on it and start to working hard, I think we should reach our numbers pretty soon. I mean, later than whatever. So I think it's a good beginning to say, and I think we should be back on rails soon.
Yes,
yeah. Thank you.
Great. Thank you so much, ma'am. I think we come to the concluding part of this session. Overall, if I were to just summarize it, at least what I'm feeling.
I think there's Professor Kiran. There's a question there. I think you can just take it.
Oh, sure.
Yeah.
The participant's question, Jacob Shandy. Okay, Professor Jacob, actually. I'm not sure if panelists can see the question. Agriculture contributes to 70% of GDP and has relatively very low GDP per capita and contributes heavily to poverty. Why the budget has not done much for agriculture is the question. Any panelist would like to take?
Can I come in there? I mean,
sure, ma'am. Sure.
My 2 cents on that. I mean, I realize that the government has, over a period of time, has started to strive towards this cooperative federalism, the structuring that we are talking about. And so all our issues of agriculture, health, or education, most of these, I mean, education and health fall in the concurrent list, but agriculture is purely a state subject. And keeping that in mind, I am thinking that the union budget would now want to look more at what it can focus upon directly, rather than stepping into the shoes of what the states can do. So leave that to the states to take it up as they can within their own framework. And it's not that it has come down, it's just that the way it has been redone is different in this budget, because we don't have the times. I'm not going into exactly where it has been done, but you can see that there has been a focus towards digital technology. There is a striving towards bringing waters together. So there is that river link that's happening. Then there is the Kisan loans that there is going to be given an impetus to. Then there is the soil testing centers. So there are things that are being done which can be pushed through the centrally sponsored schemes, rather the central schemes, but others are left on the centrally sponsored schemes. So that's a different way of doing it.
Okay, good. All right. With that, I think we are also running out of time. Participants, if you have any questions, all of you have my WhatsApp and email ID. Please send an email. I promise I'll get a response from the panelist, and I'll definitely share it with you. I would definitely do that. So thank you all once again. Overall, I was just my bit. What I'm feeling after hearing your analysis since the last 1 hour is that there is a positive sentiment. There's definitely a positive outlook. A lot to look forward for. At the same time, there is some kind of pluses and minuses with the administration side of it, or the implementation side of it. So it's times have to tell us how the things will move. So maybe probably further budgets, further steps taken by the government, and if they are consistent with what has been proposed now and is implemented, I think we'll get more clarity. And I think this kind of a churning out of brainstorming should continue happening. So with that, I thank all of you to sharing your very insightful knowledge and comments on the questions raised. Thank you so much. Ronnie sir, would you like to?
Yeah, thank you, Dr. Indira. Thank you, Chetan. Thank you, Manoj. Yeah, for your very insightful, into this entire the budget proposals, the thinking behind the budget, and how the government is really looking at it from a long-term perspective. So thank you for your time, and thank you for participating in our budget analysis session today. Thank you.
Thank you.
Thank you all. Thank you
Thank
for
you.
the participants also. We have nearly 250 participants who attended this event. Most of them are from different walks of life. So thank you all for taking time out, and we will keep sharing more such programs with you. Request you to please participate in all the programs, and please do visit our website for our details. Thank you all. Thank you. I'm closing the session.
Thank you. Thank you so much.
Thank you.